This is where it all started, New York City.
He wasn't born into money. He didn't work on Wall Street. In fact, he drove a taxi through the streets of New York, just trying to make ends meet. But one day, with just $3,000 borrowed from his credit card, Bruce Kovner placed his first trade, and that decision would change his life forever. From a struggling cab driver to one of the most respected and disciplined traders in history, Kovner built a multi-billion-dollar hedge fund, not through luck, but through patience, control, and deep understanding of global markets. He became known as the man who could see the world through numbers, a global macro master, turning economic chaos into opportunity. This is the story of Bruce Kovner, the billionaire trader who proved that knowledge, discipline, and risk management are more powerful than luck. If you've ever wondered how a normal person can rise to the top of the trading world, this story will inspire you. Welcome to the channel. Today we will be talking about a legendary trader who went from a taxi driver with $3,000 and a dream to retiring with over $5 billion in assets. Bruce Kovner was born in Brooklyn, New York in 1945. He studied political science at Harvard but never finished. He was brilliant but restless. In his 20s, he struggled financially and worked odd jobs, including as a New York City taxi driver. He had no financial background, no family money, just curiosity and a sharp mind. In the mid-1970s, Bruce was in his early 30s, living in New York, driving a taxi, teaching piano lessons, and doing small freelance work. He was naturally analytical and loved history, politics, and economics, especially how government policies affected everyday life, inflation, oil prices, etc. That curiosity about how money and power shape the world made him start reading about the currency and commodities markets. He once said, "I was fascinated that you could sit in your apartment, understand global economics, and actually make money from it." One day, he came across a Wall Street Journal article about commodities futures, markets where you could trade things like soybeans, gold, or currencies without owning them physically. The concept blew his mind. You could trade based on price movements instead of owning goods. Small capital could control large positions through leverage. Knowledge and timing could beat institutions. He realized, this is something I can do from my desk if I understand how the world moves. In 1977, at age 32, he borrowed $3,000 from his credit card. His first move? He bought soybean futures, betting the price would rise. At one point, his $3,000 grew to $45,000. But then, the market reversed. Fear took over. He panicked, exited the trade, and walked away with $22,000. He later said, "It was the most frightening experience of my life. I could have lost everything I didn't have." That first trade taught him the two golden lessons of trading. 1, always control your risk, and 2, emotions are more dangerous than the market. Kovner joined Commodities Corporation, one of the top trading firms of the 1980s. His skill and discipline caught the attention of Commodities Corporation, a respected firm known for grooming top traders like Michael Marcus. There, under professional guidance, he transformed from a self-taught trader to a global macro strategist. His style combined macro trading, meaning big-picture economics, with strict risk management. He traded currencies, commodities, and interest rates, analyzing how government policies, inflation, and global events moved prices. Over time, he built a reputation for being calm, disciplined, and fiercely analytical. In 1983, he founded his own hedge fund, Caxton Associates. Starting with just a few $1,000,000, it grew into one of the most successful hedge funds in history, managing over $14 billion at its peak. His average annual returns hovered around 20% plus for decades without major blowouts, a rare feat in trading. By the 2000s, Kovner had retired from active trading, worth over $5 billion. He became known as one of the most consistent and risk-aware traders in modern history. Unlike many other legends, he never blew up. He mastered both growth and survival. Kovner's approach is respected even among today's algorithmic traders. Risk management first. Never risk more than 1% of capital on a single trade. Stay rational. The market is an emotional place. Your edge is staying unemotional. Global thinking. He believed currencies and commodities are driven by politics, interest rates, and global psychology, not just charts. Adaptation. He constantly evolved his strategies as markets changed. One day he actually said, "If you think you found a formula for success, you're finished. Markets change, you must change with them." Now let's dive deeper into a strategy that brought him success. Unlike many traders who rely only on charts or gut instinct, his strategy was a blend of macroeconomic insight, disciplined risk control, and flexible execution. Global macro approach. Kovner was what we call a global macro trader, meaning he made trades based on big picture trends across the world. He studied how politics, central banks, interest rates, inflation, and capital flows interacted. Example, if the US raised interest rates while Japan kept theirs low, he'd predict that the USD would strengthen against the JPY and take positions in Forex accordingly. He traded the world like one connected system. Every trade must make sense in the context of global capital movements. Fundamentals plus technical analysis. He believed in using both, not one over the other. Fundamentals to understand why a market might move. Economic data, policy, supply, demand. Technical analysis to time when to enter and exit. He said, "Charts are critical. I always use them to find the right moment, but I never trade based only on charts." Position sizing and risk management. This was his number one rule. He never risked more than 1% of his capital on a single trade. He used stop losses religiously and sized positions based on volatility, larger and calm markets, smaller and volatile ones. The most important thing about trading is to avoid huge losses. You must always live to trade another day. Psychological discipline. Kovner emphasized emotional control. He viewed trading as a psychological game. He practiced patience to wait for the perfect setup, emotional detachment from losses, constant self-evaluation to stay humble. The best traders are calm and disciplined, not because they don't feel fear, but because they've learned to control it. Flexibility and adaptation. Unlike traders who marry one strategy, Kovner adapted constantly. If a currency or commodity market changed structure, he changed with it. He once said, "If you think you found a formula for success, you're finished. Markets change, you must change with them." He believed in dynamic thinking, observing how macro cycles evolve and shifting strategies accordingly. Diversification by logic, not by number. He didn't spread his bets randomly. He only diversified when trades were driven by different fundamental reasons. For example, a long USD by JPY, a monetary policy trade, a long gold position, an inflation hedge, a short bond trade, an interest rate expectation. Each position had a separate logic, not just a different asset. Constant learning. Even as a billionaire, he was obsessed with improving his process, studying history, politics, and economics daily. He said successful traders must stay humble because the market punishes arrogance quickly. Here are some famous quotes from Kovner. Risk management is the most important thing to be well understood. Undertrade, undertrade, undertrade. This should be your motto. The market is an emotional place. The key is to keep your emotions in check while everyone else loses theirs. Do not overtrade. Do not let a single trade hurt you. Trading is about staying in the game. I use fundamentals for big picture direction and technicals for timing. The key is to marry the two. One of the most important rules of trading is to play great defense, not great offense. If you think you found a formula for success, you're finished. Markets change, you must change with them. You have to be willing to be wrong and to sit on your hands until the right trade comes along. Trading the global markets is about understanding human nature under pressure, not just numbers. Fear is healthy in trading. If you're not a little afraid, you're probably taking too much risk. Every day, I assume every position I have is wrong. I know where my stop levels are, and I know what I'll do if the market moves against me. The most important thing about trading is to avoid huge losses. You must always live to trade another day. The best trader's enemy is overconfidence. You can control risk, but you can't control outcomes. Patience and discipline are the real secret weapons in trading. Bruce Kovner's story isn't just about money. It's about mastery. He proved that you don't need to be born rich or work on Wall Street to conquer the financial world. What you need is knowledge, patience, and the discipline to control your emotions when everyone else loses theirs.
From driving a taxi through New York's chaos to managing billions across global markets, Bruce Kovner reminds us that true wealth is built not from luck, but from control. So the next time you open a chart or place a trade, remember, it's not the market you have to beat, it's yourself. If you enjoyed this video, hit like, subscribe, and let me know in the comments which legendary trader you want to see next. Until next time, trade smart, stay patient, and keep learning.